Hello, everyone. Good morning to you, and welcome to another session which promises to be enlightening and, of course, informative as we focus on my price action based technical analysis. In this session, we are going to be thoroughly examining the list of financial instruments on our watch list for the week, and these are the USD JPY, the XAU USD, GBP USD, and of course the I think the US All Spot. So we are going to be preparing for today's trading session. We have seen some little observation as regards to the market dynamics, and the dollar though had a little bit of a dip during the course of yesterday's trading session as a result of the data that came in from the US economic docket, which wasn't really that promising as figures came in below expectation. And it appears the dollar is gradually going further to drop to the downside again this morning. So we are going to be reviewing how we are going to be anticipating trading opportunities. We are also going to prepare for the upcoming trading session as always. I have conducted a comprehensive analysis of the current market structures on all of the instruments we are monitoring to identify potential trading opportunities that we can capitalize on. So I will be sharing with you my findings and accompanied by simple setups like we always do that will enable us to effectively navigate the market structure. As always, our analysis will heavily rely on trend lines, key levels, chart patterns which will provide us with valuable insight into the historical price movement. And for those who are joining us for the first time, you are highly welcome. And what we simply do here is to gather here in anticipation of both the London and the New York session, where we come together to review current market structures, manage our existing trade, manage our current positions, while we also aim to position ourselves strategically for both the London and the New York session. So you are highly welcome on board. And the instrument we are monitoring so far this week is as a result of a top-down and detailed analysis of this instrument which I shared during the course of the weekend. So basically these are all follow-up details to that video. So I implore that you watch this video so that you can have a background knowledge of how we got to the point. So because we are going to be basically talking on the 1 hour time frame, and you might be a little bit confused as regards to how we got to the setup. So it's important that you watch this video. So I already have the link to the videos right in the description box of this current video. So after the session, you can watch them and have a background knowledge of how we got to this point. And in fact, they are duly timestamped, so you can easily navigate to whichever aspect of the video that is of your interest. So I implore you to watch these videos after the end of the session, and it could also help you to gain more insight into the market structure, hereby giving you the necessary information to independently trade using the information you have gathered. So once again, you are highly welcome on board. So as you know how we do it in this community, the first thing we are going to be doing before diving into the business today is to check the economic calendar. As we all know, these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. So with that being said, here we are going to be diving right into the economic calendar, and you all know what we do. We focus on high impact events that will be affecting any of the instrument we are monitoring. So we are going to be looking at economic features from the United States, the Japan's economy, and of course the United Kingdom's economy. So what I'm going to be doing here is to filter in for this week. I keep getting my settings go back to the next week. I don't know why. So here we have for today. So for today, July 4, Tuesday, from what we have here, there are no high impact events to look forward to from any of the economic dockets on our watch list. However, in as much as the week is still very early, we still need some catalyst, which more come in the form of fundamental factors. And in that regard, I will try to filter in the medium impact event, and let's see if we can still have something to work with for today or to anticipate for today. So scaling down into, okay, so here we are on Tuesday. So still yet we don't have any high impact event or medium impact event to look out for. So we are going to be focusing on our technical skills today to identify trading opportunities. So with that being said here, let's dive right into the business for today. And as usual, first of all, before I kickstart the session, before I kickstart the chat, let's confirm that the voice is coming out clear enough and the visuals are quite good by typing in the comment section. Give me a feedback, as this will help me to do the necessary adjustments for us to have a better experience out here. So I will really appreciate your feedbacks. Please let me know in the comment section if there are any issues as regards to the broadcast. All right. Okay, so as we shall move right into the first instrument for today. So the first instrument on our watch list for today is the US All Spot. So on the US All Spot, it has been an interesting start to the week actually. Remember, we were able to buy the US All Spot yesterday. We had a couple of positions before the bearish momentum began, and in fact, price action moved significantly well. I think the first position moved over 100 pips before the bearish bearish momentum started. And then the second position we took advantage of at the breakout of the $71 area also moved about $70 level, $70 pips, 70 pips, sorry, before the bearish momentum began here. So we started the week on a strong bullish note, actually, before this bearish momentum pushed price back to the downside. And one thing you will notice about the structure, let me first of all zoom out so that we can acknowledge what we saw in this particular market at the beginning of the week. And remember, we had this ascending channel which we were using to guide our trading activity for the week. And in fact, it also confirmed how strong the buyers are in this particular market. Then in addition to that ascending channel, we were able to spot a key level that we are going to be using to guide our trading activity for the week. And the key level falls exactly around that $70 area, which you can see highlighted in red right now. And we agreed here on Monday that we are going to be using this level to guide our trading activity for this week. And you know how we use our key levels in this community. As long as price action remains above the key level, we want to be looking out for patterns and structures that will support a bullish momentum. However, if price action drops below the key level, we want to be looking out for structures and patterns that will support a bearish move. And if you look at the current structure we have right now, you would notice how price action has remained above that key level since Thursday of last week's trading session. So despite the fact that we saw the strong bearish engulfing candle taking us out of that buy position with a modest size of profit, bringing price back into that $70 area yesterday, we saw how immediately price action tested the $70 level. We begin to see some buy pressure resume around that area. And for me, this is a clear sign that we might likely be getting ready for another wave of bullish momentum. But how to anticipate that is what we are going to be looking at today, so that we don't just jump into any unnecessary trade at this point. Now, if we zoom into the current structure and taking into consideration what has been going on in this market since last week Friday, it is quite clear that price action has been consolidating between that $71 level and of course the $70 area, which happens to be our key level for the week. And with this kind of situation here, it is quite clear that the market is going through an indecisive phase at this particular point in time. And normally when we have price action trapped within a range like this, what we want to be doing here is to remain patient, waiting for structures to be broken to give us a signal of buying or selling. And with a flat channel like this, we always expect price action to either break out of the resistance line or break down of the support line for an opportunity to trade. Now, with the situation we have right here, price action is currently above the $70 level, which is a sign that we want to look out for buying opportunity. Remember, price remains above our key level. And for the fact that price action has been finding buying pressure around this area, which also shares a confluence with an ascending trend line, let me call it the support line of the ascending channel, I'm of the opinion that buying above this area will be make a whole lot of sense. So what I'm going to be doing now is to try and see how to position ourselves in such a way that we can catch that move. Now, if we take into consideration the impulsive move that started yesterday, bringing price crashing into that $70 area, you will see how price action has been forming something like a reversal pattern, and the inability of price action to break or find new lows at this point for me is a clear sign that we are likely seeing a gradual build-up of bullish momentum in this particular market. So what I'm going to be doing here is to use the $70.40 level as a neckline to guide this trading activity going forward. So I want to see price action break out the $70.40 level, retest of that structure to give me a confirmation of buying the US all spot today. So let's see how price action will play out around this area. So what we are looking out for right now is a breakout. Then we scale down into our lower time frame where we want to see a retest of the $70.40 level, giving us confirmations that we are good to go to buy. So that is how we are going to be buying the US all spot for today. And remember, we also have key levels like the $70.75 area. If this level is broken to the upside, we are going to be looking out for more opportunities to join our existing trade and then maximize the potential of the bullish move. And also, we have a key level at the $71 area where a breakout or retest of that structure will as well welcome more opportunities in this market. So it's looking very bullish this morning. So we are holding on to a bullish bias. And of course, I will definitely give you updates on my TradingView and Telegram platform. Now, in as much as we're looking out for buying opportunities in this particular market, it is quite reasonable that we also take into consideration the potentials of the sellers too. And with the situation we have here, I would rather see price action break through the key level at the $70 area for me to consider selling the US all spot for this week. So I want to see a breakdown of the key level at the $70 area. And in fact, if we do have a breakdown of that key level, the trend line, the support line of the ascending channel will also be broken to the downside. And in that regard, this will be a clear sign that the support line may no longer be strong enough to negate the bearish momentum. And as a result of this, we'll start looking out for opportunity to sell. And once the breakdown happens, we know how we do it. We scale down into a lower time frame, look out for retest of structure, after which we want to be joining a trend continuation to the downside. So this is how I'm going to be selling the US all spot for this week. So I wouldn't be selling unless we have a breakdown of the $70 level. So these are my views here on the US all spot. If you have any questions, feel free to let me know in the comment section. I just saw a comment now from Richard Blackett. Good morning, Richard. How are you doing today? And you said here that it's breaking up slightly. Okay. Is it the video or is it the sound? Is it the audio or the video? Please let me know in the comment section so I can do the appropriate adjustment there. So let me know, is it the video or the audio that is having issues at this point, so I can just tweak some settings on my streaming device here. Please let me know in the comment section. I will take some time to wait for a feedback on that one before I move on to the next instrument. So if you have any questions regarding my explanation on the US All Sport, feel free to let me know in the comment section. So I will be taking some time to wait for feedbacks, questions, and of course give you the time to mark out these levels on your chart, as we are going to be using this to guide our trading activity for today. So I'm trying to sort this out here. I'm still expecting the feedback as regards to the quality, the audio and the video. So I will continue with the next instrument on our watch list and continue to watch the comment section to see if there are any feedbacks as regards to the stream. All right, so the next instrument on our watch list is the GBP USD. And on the GBP USD, we have an interesting situation going in the market right now, as the market is very, very choppy at the moment and caught within a range where we have an idea into the level of indecision at this particular point in time. And if you look at the structure, remember at the beginning of the week, we were able to spot a range between the 1.27070 level and of course the 1.268800 area to give us a flat channel to work with. And since then, we had a sell position triggered at some point where price action broke down the support line here, giving us the first sell position for the week. And you can see what happened. Price action moved about 50 pips thereabout, or 30 pips thereabout, before it snapped back into the entry point. And since yesterday, we have seen a situation here where price action is back into that range and has since been caught within that level to further emphasize the level of indecision in this particular market. Now, in this kind of situation, we know how we do it. We wait for structures to mature before we want to be jumping into any position right here. So it's either price action breaks out of the resistance line to give us an opportunity to buy, or breakdown of the support line to give us an opportunity to sell. And in fact, with this kind of situation here, we need to be very, very careful and remain patient to wait out for structures to mature. And in order to help us guide our trading activity for this week, I've been able to identify an ascending trend line after connecting the series of higher lows, giving us a beautiful trend line to work with. So what this simply means here is that if price action continues to trade above this ascending trend line, we shall be looking out for more opportunities to buy the GBP USD. And the only thing that will make us sell the GBP USD this week is to see price action breach this ascending trend line, breaking it to the downside. And in fact, the trend line here also shares a confluence with that support line at the 1.26880 level, where a breakdown of the structures will be welcoming an opportunity for us to sell the GBP USD. So this is what we are going to be looking out for to sell. So we want to see a breakdown of both the trend line and the 1.26800 level for us to join any bearish move at this point in time. However, if price action climbs up and breaks out of the 1.27070 area, we want to be looking out for opportunities to buy. And in fact, I'm going to be risking a buy stop order above this area, but normally we should be waiting for a breakout retest of the structure due to the current choppy scenario we have been witnessing here in the last 24 hours. So what I'm going to be doing here is to have a buy stop order, then have my stop losses right below that support line at the 1.26800 area, which will be dovetailing to about 20 pips thereabout, so we can give room for that volatility that could still happen in this particular market. And one thing about the breakout of the 1.27070 level is the fact that it also shares a confluence with that descending trend line we identified in the video during the course of the weekend. So a breakout of this level will confirm that the trend line also may no longer have the capacity to continue to negate this bullish attempt, where a breakthrough will confirm the strength of the buyers at this particular point in time. So our center of focus for today on the GBP USD is simply between the 1.27070 level and of course the 1.26880 level. So let's see how price action will play out within this area, and I will get you updated in my comment section on both my TradingView and Telegram platform as we continue to monitor price action. I can see series of comments in the comment section. Miraculous Meditation, good morning to you. Glad to have you around. And you said the video is pausing. Zach Z says the same thing too. All right. Okay, so let's run. Let me quickly do some adjustment here and I will get back to you in a moment. I'm so sorry about this. Let's make this work. I'll get back to you in a moment. Hello everyone, I'm sorry about the issues, the video issues, but things are working quite fine here from my own hand. I guess it's from um, the YouTube intermediary that is causing these all issues. But what I've decided to do now is to continue with the live session. So I have a better quality here, which I would upload after the end of the session, so you could check it out and watch it um, for your own use. So sorry about this. So I will continue with the XAU USD. So on the XAU USD, we had an interesting position yesterday. And so for those who have not been part of our live XAU USD live monitoring, please try and be part of today's session. It promises to be very interesting. Yesterday, we were able to scoop over 150 pips on the single move. We took advantage of a buy positions just right above the $1,914 level, and we rode the move all the way to the upside. Price moved about 150 pips on that first position. We had a sell position, second position triggered at the breakout of the 1,920. That also moved about 100 pips, making a total of 250 pips. And we had a third position moved about 50 pips again, and we moved our stop losses right into the entry point of that third position where we were taking out of that position. And what I said here is that as the bearish momentum continues to the downside, we want to remain patient for new structures to mature, probably in anticipation of the trend continuation to the upside. And one of the things I said in my commentaries during before I went to bed yesterday, I shared this on my public platforms. I said here that a potential reversal pattern or buying pressure will be the sign we are looking out for to signal that the retracement phase has ended. And if you look at the structure closely, let me zoom this in a little bit so that you can see things clearly. You will see that we had this consolidation phase around the 1,920 zone, and in fact it was characterized with buying pressure around that area, giving us a sign that we might likely be getting ready to buy. And if we map out the resistance and support line for this range, we have something around the $1,922 level, where a breakout of that structure will be welcoming an opportunity to buy. And if you are taking advantage of that opportunity this morning, you will be running with over 50 pips in profit at this particular point in time. For me personally, I missed out on this opportunity. It was in the midnight here, and I was still fast asleep, so I missed out. But for those who took advantage of this opportunity, well done to you for being on standby to have caught that move. And I do hope you also maximize the potential of this move. As you remember, we had a level at the 1,925 where a breakout also will welcome more opportunities. So for those who bought this and who are still in the buy position, well done to you for being on standby to have caught this move. And you know how we do it in this community. As soon as price action moves significantly well in our favor, we want to be moving our stop losses to secure the current buy position. And from the look of the structure here, we of course want to give room for price action to breed. And so I will be suggesting that anywhere below the $1,924.80 and the 1,923 area seems most appropriate to move on stop losses to, while we hope that price action will continue to the upside. Now we should be having another buy stop order above the 1,930 level to capitalize on this move to the upside. We can also have another one above the 1,933 to maximize the potential of this bullish move. So we still hold on to a bullish bias on the XAU USD for today. So as long as price remains above that 1,920 level, we remain bullish. Now, to make things a little bit more easy for us to manage our trade on this commodity, we want to identify a trend line which we are going to be using to guide our trading activities going forward. Now, if you look at the structure here, we have a low here at the beginning of the week, though we had a little breakdown of the structure, which was immediately followed by an engulfing bullish candle, hereby negating any selling attempt around that area. And it appears we have another new higher low here around the 1,920, which is giving us the confidence to continue with this bullish move. So what I'm going to be doing here is to bring out the line chart and let's connect the series of higher lows together, giving us a beautiful trend line to work with for today. So what this simply means is that as long as price action remains above this trend line, we shall feel comfortable in our buy position while we also look out for more opportunities to maximize this move to the upside. So let's use this level as a yardstick. So the only reason that will make us change our bias from bullish to bearish is for us to see this trend line broken to the downside. And in fact, it shares a confluence with the 1,925, so we can use that level to guide any bearish opportunity. And one thing I want us to remember here is that we are not getting too excited as soon as the breakdown of the structure happen. We want to wait for confirmation, which will of course come in the form of a retest of structure on our lower time frame to join the move to the downside. So let's keep this in mind. But for the fact that price remains above the trend line, let's hold on to our bullish bias. And of course, I will be giving you updates as at when due on my public platforms. If you are not there, please be part of us on the Telegram and TradingView platform. I have the ID scrolling at the bottom of the screen right now, so you can check it out there, or you can even go into the description box where I have the details of how to contact me right there. So that is that on the XAUSD. It's a very simple setup. Let's mark these levels out on our chart and let's use it as a guide into our trading activity for today. So moving on right now to the last instrument for today, which is the USD JPY. Now on the USD JPY, things have been very, very interesting since the beginning of the week. Price has been very, very choppy actually. And of the opinion that market participants are very wary of the possibility of the Bank of Japan's intervention in this market. As you can see, the yen has been dropping significantly against the dollar, and Suzuki mentioned on Friday last week that like a caution, like a warning to the bears in the markets that they should stop shorting the Japanese yen, and if this continues, that the Bank of Japan will have no other choice than to intervene and buy in the yen. And so anything could actually happen at this point in time. And in fact, since the beginning of the week, we have noticed our price action has been within a range, and coupled with the fact that it was within a range, we saw some level of volatility happen, which shook out a lot of people from the market yesterday. And during my live, during this morning, while I was trying to dissect the current market structure to identify a potential trading opportunity here, I was able to identify a simple setup that we can actually use to guide our trading activity for today. And if you look at my commentary on the USD JPY this morning, I shared something here. If you are with me on my TradingView and Telegram platform, you would have seen this one, but let's run through this for the sake of clarity here so that we all be on the same page. All right, so this morning I shared this here. I said the market continues to exhibit a risk-averse sentiment, with traders exercising caution due to concerns over possible intervention by the Bank of Japan to bolster the Japanese yen. Given the current circumstances, it is prudent to adopt a patient approach and wait for a decisive break and confirmation of the levels indicated on the chart before any potential trading opportunities. So this morning I was able to identify some levels here, and one of the level is the 144.450. That is one. And then I was able to connect the series of higher lows here since the beginning of this week to give us an ascending trend line to work with for today. Then in addition to the ascending trend line, we also have a descending trend line too. after connecting the series of lower highs since the beginning of the week, we have something like this to work with. And one thing about this structure is looking like a triangle pattern, and it has a tendency of either transitioning into a trend continuation to the upside or a reversal pattern to drop to the downside. So what I'm looking out for here is either a breakout of this triangle to buy or sell at this point. And if we look at what has been happening here in the last 10 to 12 hours now, we can see how the 144.690 has been characterized with a lot of selling pressure around this area, giving me an idea that we might not likely see a breakout of that descending trend line. So in this case scenario, with a breakdown of the ascending trend line here, I'm of the opinion that price action might likely go to the downside. And to be able to capture this move, I have a level situated at the 144.450, which we are going to be using to guide our trading activity today. So what I'm simply saying here is that a breakdown retest of the structure should welcome some selling opportunity in the market. And in fact, we already have a breakdown. We have a retest going on at this point in time. And if you're already in this trade, it's okay. Just have your stop loss. Want to give room for price action to breathe. Remember, there has been a lot of volatility in this market, so I will be placing my stop loss just right above that resistance line, which is also above the descending trend line that we identified earlier. And if price action goes on to break down our key level for the week at the 144.200 level, we want to be adding more position to our existing trade. So this is how we are going to be managing our position on the USD JPY for today. So I'm holding on to a bearish bias here for the fact that we have an engulfing bearish candle in the last couple of hours now, breaking through the 144.450, and we have a retest already of that level. So let's see how this move is going to push further to the downside. But if at any point in time during the New York session or London session today, we have a breakout of the resistance line at the 144.690, a retest of structure will be confirming a trend continuation to the upside. So let's keep this in mind while we continue to monitor price action. So these are my views here on the USD JPY, and I'm so sorry about the freezing in the video, and I'm going to be uploading the full video of this session right away after I end this live stream, so you can check it in the video section on my YouTube platform. So I think on this note, I would want to call it a day here. It has been a wonderful moment, and the days ahead looks very promising. So we already have simple setups that we are going to be using to guide our trading activities today, and I hope that you mark these levels out on your chart. And one important thing, remain very patient to wait for structures to mature before we jump into any positions. And of course, I'm going to be with you in the comment section of both my Trading View and Telegram platforms to give you updates as at when due, while we also continue to monitor price action. Do have a wonderful day, everyone, and I look forward to seeing you during our XAU USD price action live monitoring, which will be coming up in about 2 hours from now. I hope you already have the link. I will be sharing the link on my public platform, the Telegram platform, so you can easily join us there. Now let me also type the link in the description box here right now, so that we can be part of the live session. And please don't forget to support this project by clicking the like button. Your like button, is valuable to me personally, and of course it also helps the YouTube algorithm to push this video to a wider audience of traders who would also find this material very useful to them too. So please, thank you as you do so. I really do appreciate if you like the video. Thank you very much. So I just dropped the link to the XAUUSD live monitoring, which is coming up in 11:45 a.m. UTC. So let's see in the comment section of that.